Did you know that the present is the ideal time to purchase Tesla stock, according to an expert? For the Tesla community as a whole, these seem to be confusing times. While some investors are unsure if selling their shares is the wisest course of action, others think that purchasing Tesla stock at a discount is the greatest option. Watch till the very end to learn why. Tesla's high volatility is well known, but so are other equities. An investor stated, anytime you get the chance to buy it even as the price of Tesla stock was declining in 2021. Michael Bafuse, the managing director of Vios Advisors at Rockefeller Capital Management, stated to CNBC in June 2021 that Tesla is a company to watch due to its aspirations in the clean energy and electric car industries, as well as its about 24% market share at the time. Bafuse stated on Trading Nation, Tesla is going to continue to be the leader in the industry, especially for the foreseeable future. When you think Tesla, you think innovation. As a result of the company's recent revelation of production and delivery figures that were below Wall Street's expectations, Tesla stock is currently declining once more. On the other hand, some analysts contend that this is the ideal time to purchase Tesla stock because it is currently cheaper. Actually, celebrity investor and ardent Tesla supporter Cathie Wood, together with her company ARK Invest, purchased Tesla shares twice in October 1st, following the EV company's early October revelation of delivery and production figures, and then following the company's Q3 earnings call. In a recent article, Barron stated that good news for Tesla investors, the stock is now oversold. Dow Jones and Company publishes the weekly magazine publication Barron's in the United States. Although the bulls have suffered greatly as a result of the recent severe stretch of Tesla shares, the report suggests that they may soon have some respite. Clinical psychologist Jordan Peterson, a Canadian author, television personality, and emeritus professor at the University of Toronto, advised people to buy electric cars if they so choose, rather than diesel-powered emergency backup vehicles or electric power generators. Investing in Tesla stock is perhaps the greatest option in this regard. Undoubtedly, one of the world's most inventive companies is Tesla. Consumers turn to electric vehicles to counter rising gas prices. The company is expanding quickly. Tesla reported that it has shipped 254,695 electric cars worldwide in the second quarter. That missed FactSet projections of 264,000 and the 64,000 in the second quarter and decreased by 18% from the prior quarter. A prolonged coronavirus shutdown in China contributed to the slowdown in part. The limitations imposed on the establishment of production plants in Berlin and Austin also had an impact. Deliveries, meanwhile, were up 26.5% from the same time last year. Despite the fact that Tesla had a difficult second quarter, the business seems to be in control. All things considered, even at the new gigafactories, production was significantly impacted by problems with the global supply chain and growing costs of raw materials. Lockdowns hampered both consumer demand and production at its Shanghai factory as China carried out its zero-COVID policy. In spite of this, Tesla produced $621 million in free cash flow and increased second quarter sales by 42% year over year. Additionally, Musk stated that the Tesla Cybertruck should still ship next year and that deliveries of the Tesla semi-truck might start as early as this year. Elon Musk, the CEO of Tesla, said that the company's manufacturing efficiency might be its greatest competitive edge during the company's annual shareholders meeting in August. But he also mentioned that robotics driven by AI would present one of Tesla's biggest long-term prospects. Furthermore, Musk reaffirmed the company's objective of producing 20 million vehicles by the end of the decade and stated that Tesla might reach a manufacturing run rate of 2 million vehicles by the end of this year. In terms of value, Tesla may seem expensive to most investors, but the business has consistently shown strong revenue and earnings growth over a number of quarters. Furthermore, the company's growth trajectory is still very much intact, according to yearly earnings predictions. Over 365,000 vehicles were produced and over 343,000 were delivered by Tesla during the third quarter of 2018. As production volumes rise, Tesla claims that it is getting more and harder to find vehicle transportation capacity at a fair price. According to Tesla, the business started shifting in Q3 to a weekly mix of vehicle builds that were more evenly distributed across regions, which increased the number of cars in transit at the conclusion of the quarter. Refinitiv polled analysts and reported Q3 2022 earnings of $1.05 versus 99 cents per share adjusted expected. The company also announced Q3 2022 revenue of $21.45 billion versus $21.96 billion predicted. In Q3 2022, Tesla's net income gap was $3.33 billion. The company's automotive gross margins remained constant at 27.9%. the same as they were in the previous quarter. In the same time the last year, Tesla declared $1.62 billion in earnings. The carmaker's cash balance reached a record $21 billion last quarter with operating free cash flow of $3.3 billion. Experts think Tesla has a bright future ahead of it. Even if a PE above 70 indicates an exceptionally high value, investors looking years or decades down the road won't find the company to be that rich if it grows at or near 50% for several more years. Purchasing a Tesla at this time may be wise. Ultimately, the majority of analysts think that long-term investors are a better fit for Tesla stock than short-term ones. Nevertheless, optimistic investors aspire for completely driverless cars in the long run. Even while dozens of businesses are, in one way or another, pursuing that goal, Tesla's lead is hard to overcome. For years, Tesla has been developing its use of cameras, radar, and GPS to the point where its cars are essentially self-driving. Goldman Sachs says Tesla is a great investment. To capitalize on the trend of green inflation and rising oil prices, Goldman Sachs selected Tesla and a number of other EV-related equities in March. Most of the equities have a 50% or more potential upside, according to the bank's analysts. In reality, innovation in electric vehicles will continue to propel investment and growth in 2022, predicts Goldman Sachs. Despite the stock's increase, Goldman Sachs analyst Mark Delaney thinks Tesla still has room to grow. Following a meeting with Martin Vicha, Tesla's head of investor relations, Delaney offers his opinion. Delaney stated a price objective of $333.33. In accordance with that, reaffirmed their buy recommendation and projected a plus 22% increase in the stock price. Even research analyst at Deutsche Bank, Emmanuel Rosner, was more optimistic about Tesla as a whole. According to the company, Tesla is one of the most captivating automotive success stories. Even while investors shouldn't get too caught up in a company's performance over a 3-month period, they nonetheless keep an eye on quarterly results since they can reveal patterns that support or contradict the opinions of stock analysts regarding a company's future. That being said, as EV competition increases globally, some investors are concerned about demand destruction. However, Tesla's business is still doing well. Elon Musk, the CEO of Tesla, really said during the aforementioned Q3 earnings call for investors, we have great demand for Q4, and we intend to sell every car that we build for as far as the future is concerned. For precisely this reason, the business has invested billions of dollars in the construction of 2 new manufacturing sites in Texas and Germany, in addition to modernizing its Shanghai facility. At full capacity, the China facility can currently produce 1.1 million vehicles yearly. In September, it reached a monthly record of 83,135 units, drawing closer to that run rate. Additionally, the business has stated that there is a greater demand that it can meet for its energy sector, which includes solar rooftops and battery storage, in the third quarter sales. From that division accounted for 5% of overall revenue. Despite challenges with its supply chain and logistics, Tesla is clearly doing well. Due to shipping delays, the corporation built 22,000 more cars in the third quarter than it was able to deliver. In the fourth quarter, the cars will belong to the customers. The company anticipates that output will still rise at a rate of 50% annually, even though that problem might prevent delivery from meeting its 50% growth objective in 2022. Investors question if the stock is valued fairly in spite of this. Despite the acceleration of net income this year, the price-to-earnings ratio for the past 12 months is still above 60. However, that P will fall rather quickly if the multi-year 50% annual growth level holds. However, the experts think that over a 1 or 2 year period, investors shouldn't rely on any investment to guarantee a specific return. The present supply chain concerns are just one of several variables. Despite being most recognized for being a divisive leader, Elon Musk has also made bold forecasts. Deliveries of the Tesla semi-truck are scheduled to start next month, having been first announced over 5 years ago. Even though Tesla shares have dropped about 50% from their peak, given the company's anticipated growth, long-term investors may wish to seize this opportunity to purchase Tesla stock at this discounted price. Watch this channel with the greatest experience by subscribing.